Good morning once again. Today is Monday, so we're going to discuss all the news that happened last week and what are the things that we should focus on during this week with all the market movement, the opening of the market. Our head of market analyst is with us, Nour. We've seen the dollar index drop quite well actually at the
Hmm.
opening or since the opening of the market. Despite the fact that on Friday, it just had a small pullback. Like, okay, we did close the day below 106, but it wasn't that low.
Sure.
So, which is a bit not surprising. We're still within the same range. The trend is up, and we just retouched the same levels that we were trading last week or the beginning of last week. So,
Yeah.
what do you think regarding that part? And did the core PCE affected? Like this move is because of the core PCE, or
It,
this is another market reaction?
it's multiple basically. First, the core PCE or the data that we saw last week, it came in like a lot of in line with the market expectations. So most of the move, let's say, we can mostly say that it's basically was priced in.
Yeah.
The only thing that was kind of interesting was the Chicago PMI, which bounced back. And that's one of the reasons why the dollar actually did not take a hit on Friday, but it took a hit on Monday today. Chicago PMI basically just bounced back to 47 from almost like 35. This is huge because the Chicago PMI always, whenever you see it below 45, it basically gives the market some sort of a hint that a recession is coming. Now, on Monday earlier today, we were seeing a major decline, or the at least for the time being, the dollar index is down almost 0.5%. This is
Yeah.
basically on the back of what's happening in Europe. So basically the move in euro is reflected more on the dollar indexes because of the domination of the far right, but at the same time, the centrist and the left wing in France are basically coming into some sort of an alliance to stop the far right, and this would happen if basically the left would pull their candidates. This
Candidate.
will give the current government an edge over the far right, and this is why basically the market is happy. If you look also at the futures in Europe, at least Euro stocks is up so far as 1.6% before the open. So this is giving the market a little bit more of not a panic attack, at least,
But we
starting the
can see
week, and then
for the ones
the
that
second
trade
round on the
FX,
7th.
for the ones that trade FX, they can see it as well. If you don't trade the future market
Oh
or
yeah.
any other type, so it's too obvious on the euro dollar pair. So
Hmm.
euro dollar is trading again 107.66 or something around that level. We opened on a gap and the market's going up. It's a nice move. We're still below the moving average. Keep that in
Yeah.
mind. Moving average should be around the 0.790. So the cross above 0.790 will be the cross above the moving averages on the pair of euro dollar. But despite this, I like even though we've seen the pullback on the dollar index, I didn't see such a big move on the dollar yen.
Yeah.
So I can still see dollar yen on the top. We're almost at 161.
Yeah.
We started we started the day on a kind of like a side move, went up and then down again, but we're still trading between 61.20 to 60.85.
Yeah.
The trend is still up. We're still trading above the moving averages. We do know that in a fact that we discussed on Friday and the previous days that the Bank of Japan will intervene, and this is very soon, and it's going to be much, much more than any other move. So we don't want to repeat ourselves, but
Yeah.
at the same time, do we still hold the same levels? Like, are we still keeping the same levels as support and resistance here? Because
I think.
for the daily or intraday traders, we want
Yeah.
to make it clear for them.
I mean,
What's
I
your
think
support and resistance on dollar yen?
so far, I mean, the resistance is basically the top of the top of Friday's high or last week, which is 161, 161.30. And this basically shows you, despite the fact that the dollar index went down, dollar yen did not. or the yen did not strengthen. This shows how weak the yen is basically is, at least. So for the time being, we still have the 161 between 27 and 30. And then following that, I think there would be at least another, I would say 50 to 70 pips to go back up towards maybe 162. But this is the area where you have to think about like what the Bank of Japan will actually do, whether they will intervene or not. And not to forget to mention that they fired the top currency diplomat from the Ministry of Finance last week, Kanda, and they appointed.
They hired him recently.
Exactly. They appointed a new guy, which basically it might be kind of like a move that they would want maybe a stronger verbal intervention from somebody. So I think we're still having at the same time 161.60s and we have 162. And on the downside, of course, you'll have to keep an eye on the 160 because last week we did hold the 160 twice. 2 days in a row. That was the Friday and Thursday. We did retest these levels and we stayed above them. So these are your levels to keep an eye on, but make sure to keep an eye on also that the intervention might come in at any point, at any time, and it might be in a very odd time, just like they did the last two.
Out of nowhere, it will just come up suddenly.
The last two interventions.
I can still see if the market is going to continue up. I can see some more extension for that. I don't know why, but I have that I can see it's 163 if it's gonna continue from here.
It is possible.
It won't hold. That's the problem. It's jumping more than 100 pips per day, and which is when it does the move. So which is
it is possible.
Huge. Not
with
a regular move.
Everything is possible. Go back when the yen was stable. Back in the days of 2005, 2006, it used to be 112 in the morning, 110, and then it went all the way up to 120 something. Yeah. So go back to 2000. I would say go back to 2005, 2006. Have a look at what happened to dollar yen back then, and you'll figure out
the golden happy days.
Yeah, you'll see exactly like how sometimes it can take time to go up, but it might not take that much time to go back down, depending on the interventions that they're going to do.
Yeah, we know, and even we used to trade sterling yen back then, al majnoon. So
that's what they call it.
Yeah, exactly, locally here. All right, so let's talk briefly about gold. I can see gold pulled back. We already discussed the pullback on Friday, and we've seen it holding the position where we are at the moment. We closed positively. The positive close and what we've seen so far, does it mean gold is going to continue going up despite all the movement and whatever is happening in the market? We do know about the geopolitical tension. We mentioned this a couple of times, but there's nothing new over there. Like in that file, there's nothing new. So why we cannot see gold breaking the level of 2280?
There's at least
the reason for that.
There's at least no new catalyst when it comes to what happened over the weekend. It was already talked about that they are moving some assets to evacuate Americans from the region. But so far, there's from one side you have to look at it. Okay, inflation is still there. It is not accelerating as much as it used to be. But at the same time, the dollar index is basically also on the downside. So this is kind of like a balanced game. Going forward, at least. But I think at least during this week's trading, it depends on, some people would basically say, well, inflation is going down, so gold needs to go to crash back down. It doesn't need to, because, when inflation was going up, gold was not going up as much until we reached almost the peak. So you have to understand that the market will always price in the events in advance, not when it actually happens. So it's still the same supports. Even if you look on the daily, there's still also a pattern of head and shoulder. It is not invalidated yet. It is still holding as long as it stays above 2,360. That negative outlook is still there, and that's the invalidation level. If we break it, that would mean gold will be able to even push one more time, and probably towards 23,900 or 2,390, 2,400, while a break below the yesterday's or the weekly last week's low, that would send it back again to 2,280.
Exactly. So to sum it up, within in 1 minute, Dow Jones, S&P, Nasdaq are still at the same trend, trading above moving averages. The market is still strong until now. Dow Jones is the most realistic index, in my opinion, at least. Is the only one that is not doing the drastic and crazy move up and down. So we're still trading within the same range. Nasdaq and S&P is still trading up. Do not fight the trend for sure, but at the same time, be very careful because it's stoppish and it's something that you need to calculate within your risk management. Nour, is there anything that you would like to add on this?
Yeah, I would just say about S&P 500, we did touch the almost 5,500 almost, but at the same time, there was a clear reversal from there. I mean, we saw, have a look at the weekly candle and the daily candle. It looks, the reversal is already there. It is hard to buy indices at the current levels. I would say a correction is coming at some point, but the catalyst will come in through the upcoming economic release, because we have a lot this week. But definitely keep an eye on the ISM services and the ISM manufacturing PMI. This will guide the market basically regarding how growth is going and how the jobs or the labor market is going, because this is the main thing that everybody needs to keep an eye on going forward.
Perfect. All right. So, guys, we'll see you on Friday. It was a pleasure to see you. I can see that you don't have any questions. So, see you on Friday.
See you on Friday.